So anyone with access to a computer, internet, and some spare cash can actually invest in their favorite company. While you can make significant profits, it's also important to know that you can also lose money from investing. An investor has an option to buy shares in one specific company or buy shares through an ETF, giving beginners exposure to a bucket of top performing companies on the JSE. The second option helps you to diversify. So instead of buying shares in one specific company, the second option allows you to buy shares in many different companies in one basket. Diversification means that the risk of losing money is less, but the rewards are less as well. When gold was discovered in South Africa in 1886, it quickly became evident that a stock exchange was needed. It quickly became evident that it was necessary to raise money for the booming South African mining and financial industry. And thus in 1887, the Johannesburg Stock Exchange was born. The JSE has a history of over 130 years, offering secure and effective primary and secondary capital markets across a diverse range of securities. The JSE is the only licensed exchange for the listing of equity securities in South Africa. They allow buyers and sellers to trade in 5 different markets: equity derivatives, commodity derivatives, currency derivatives, and interest rate products. So by buying shares in the Johannesburg Stock Exchange, you hope that the value of the company and therefore your shares increase over time until they are worth more than what you paid for them. The increase in the value of your shares is called capital gain. So if you buy a share of 10 Rand and it is now worth 50 Rand, that gain of 40 Rand is capital gain. And while you wait for the value of your share to increase in value, and while you wait for the right time to sell your shares, the company will reward you for being an investor by paying you a dividend. So the first thing to do when you're considering to buy shares in the JSE for under 100 Rand is to find the right shares. So selecting the best share to invest in depends on 2 factors: risk and capital. Research is very important when you want to buy shares on the JSE. Ordinary shares are the most common type of shares traded on the stock market. These will give the trader full voting rights at the AGMs, which is the annual general meetings that the company has, as well as dividends, while allowing the benefit of capital growth if the company is doing well. So the next step will then be to find the right broker. So you as an individual cannot buy shares in your own capacity on the JSE. This is done through a registered stockbroker who will purchase those shares on your behalf. The easiest way to find a broker is to follow the guides provided by the JSE, registering for the option to buy shares through a bank, or applying for an account with SA Shares. When selecting a stockbroker, there are some factors that we need to consider. These include things like fees, reliability, and trade execution, commissions, account minimum, account fees, pricing, execution, tools or education, features, promotions. The next step will then be to register an account. Once a broker has been selected, an account can be opened. Each broker has its own unique process. So what are shares? Capital of every company is broken down into each individual units. Those units are called shares. The easiest way to think of this is that a company is a pie, and in that pie, they divide that pie into small little bits and pieces, and then you as a person can buy a piece of that pie and therefore have ownership of that whole company. This provides the shareholder a small bit of ownership in the company where the shares have been purchased. Shares are also known as stocks or equities, and they are bought and sold on the stock market. So when you own shares, you automatically become a shareholder or stockholder. And this offers several advantages depending on the type of share you own. There are several different types of shares. There's the equity or ordinary shares. Those who own these type of shares are the real owners of the company. Ordinary shareholders have voting rights when there are meetings held, and they are also provided with dividends. Dividends are simply a share of the profits that the company makes. The advantages of ordinary shares are that it's the most popular type of share, receive dividends from the profits of the company, and you provide finance to that company. And the second type of shares are preference shares. Prices of shares are set by buyers and sellers on the stock market, depending on supply and demand. For this reason, share prices can fluctuate daily or even hourly. There are more sellers than buyers, then the share price decreases, and vice versa. If there are more buyers than sellers, then the share price increases. So the main reason a person would want to buy shares is to make a profit. One can make a profit by buying shares at a lower price and selling them at a higher price. And then the second option would be to receive income or dividends. The company is not obligated to pay dividends, and there's always a risk that the dividends may reduce or not be paid. If your goal is for long-term growth, then buying shares is then the most viable option for you. Many analysts have said that holding shares may leave the investor with higher returns than keeping them in a savings account. So to receive capital on the money that you've invested, you must be prepared to place the capital at risk. So the greater the risk of your investment, then the greater the return that you will receive. With share prices increasing and decreasing daily, the investor must be able to accept that the value of their investment can fluctuate in the short term. Remember that before we start saving, we need to make sure that we've paid off any high interest credit card debt and that we have got savings that we can survive on for at least 3 to 6 months. If you would like to know more about credit cards, interest rates, how interest rates are calculated, the interest-free period, I did a video on this before, and I will also put that in the description below for your convenience. Thank you for watching, and I'll see you there.